This is the season of investor conferences, and among the best of them is about to start today, the UBS India Investor Conference. Gautam Chhaochharia, Head of India Research at UBS Securities, joins us from the sidelines of the 10th Annual UBS India Conference. It's just half an hour away from the kickoff of the conference, so we can't have too much time from Gautam. Good morning. Thank you very much for joining us. Before I get to the research ideas themselves, what's the mood? The latest Q2 numbers, as we consolidate them, brokerages tell us that there have been more downgrades, that they've disappointed by 1%, 2%, 3%. Is there a feeling at all that of impatience, action or performance not yet on the ground?
Good morning. There is a little bit. Again, that's more parts of the market rather than broader market, because broader market didn't really react negatively to the weaker Q2 numbers versus expectations. So I won't say there's a broad-based impatience. Yes, parts of the market which have been expecting a quick, sharp uptick, there has been some disappointment clearly. But the broader market continues to hold on, and we remain bullish.
No, I meant with respect to your invitees, your FIIs whom you have invited. You must have had your preliminary chat with them. Yeah. What is the sense you're getting? Give us some idea of the numbers who are attending and the mood.
Yeah. So among the invitees, what we're seeing is obviously a very, very sharp uptick in investors coming in from overseas. So last year was kind of a bottom year where we saw very lackluster response in terms of numbers as well as the breadth of clients, investors coming from overseas. So this year is almost a record uptick. Secondly, we're also seeing a lot of new investors who are coming in for the first time to look at opportunities in the Indian markets. And when you talk to them, and we've been talking to them over the last couple of months in terms of what they're expecting, etc. So they do want to get a feel of on the ground more than just what the corporates are telling them. So it's a mix of both being interested in macro as well as on the ground stuff. But the mood is definitely a lot of hope around them. So most investors are very, very optimistic on India, and they are willing to look through the 1 quarter, 2 quarter numbers or trends as long as the broad framework for medium term remains positive.
Mm-hmm. All right. Well, there's some disappointing news coming in. We'll try and get more details on that. The Aurobindo Pharma chairman has been shot at in Hyderabad, and in fact, he has escaped at this point. So that seems to be the positive takeaway. But for now, we understand from our sister channel CNN IBN that he has been shot at, the Aurobindo Pharma chairman. So we'll try and get more details in just a bit. Gautam, hi, morning. You were the one who flagged off that 8,000 target on the Nifty many months ago, and now we've surpassed that quite a bit. I understand that you have a fresh target for the end of the next year. Where does the Nifty target stand at now, and what are the leaders that could take it there?
So we're looking now at 9,600 for Nifty for December 15. And that's not really building in any major re-rating from current levels. We're still looking at around 16 times forward multiples. So a lot of the confidence around being bullish on India and having that kind of target comes in from a confidence top-down on earnings momentum finally reversing versus what we have seen over the last 4 years where we have seen continuous downgrades and misses. So at the broad market level, we do expect the consensus earnings growth estimates broadly of 15% plus. That's going to be met, and that should be enough to take Nifty up to 9,600 levels. Sectors, the big sector call for us, overweight call remains financials. And I think that's where the biggest positive surprise even from here remains. Because a broad macro thesis is that the growth recovery will be slow and gradual. And therefore, sectors which are kind of building in an immediate uptick in growth rates, there could be some relatively disappointment. While the other big part of the macro piece which we have is interest rates will come down very, very sharply. And that will be very, very positive for banks. So banks, despite growth recovery being slow, because of lower rates, will be massive beneficiaries.
Oh, absolutely. I have your note with me. And in your most preferred list, you have HDFC Bank and ICICI Bank and the mid-cap company LIC Housing. But HDFC Bank itself, you don't think the negativity which has come in because of HDFC stake being considered foreign kind of stops further FII buying, will linger on the stock? You expect it will now pick up and start moving with the market?
In the short term, that could happen. It could be an issue, but over the course of the year, I think that will get resolved, and that will not act as an impediment because the stock is relatively attractive versus its own historical levels. And our work shows that the stock, unlike common perception that it's a defensive and may not do well in a recovering economy, our work shows that it does very, very well, both as a business as well as a stock in a recovering economy.
The most interesting observation for me from your report, Gautam, is that you've removed SBI from your most preferred list. Is that because the stock has run up a whole lot, or would you be concerned that the earnings momentum is not justifying the move in the stock?
And we still have a buy on SBI, and we still like SOE banks as a whole. SBI is just tactical call because the stock has done well. We're just kind of taking profits in the short term. Okay. But we still like SOE banks and SBI.
Actually, I'm a little puzzled by your least preferred stocks list as well. You have Hero Moto there, which only seems to be scaling new highs. And you also have stocks like Infosys, Jubilant Food and United Spirits. It has its own community of buyers. Can you take us through why you have removed these four, or at least relegated them to least preferred?
So you had them there for a while, and while Hero Motor stock has done well versus expectations, the reason why we have it there is a mix of many things. One is valuations, obviously. Second is competitive intensity in that space. Third is, unlike a lot of other parts of the economy, like banks or like Maruti, for example, the ability to surprise positively is limited there because there's little operating leverage and there is little ability to surprise given less pent-up demand in two-wheelers. Two-wheelers had a good run over the last 2-3 years also. And lastly, we have been talking about rural India slowing down. So that's also going to come back to haunt Hero Motors. Infosys is a reflection of both our underweight stance on IT services, where we see growth rolling over, and the positive surprise we saw over last year is now behind us, as well as company-specific issues. So all the promises they have outlined will incur cost over the next 2 years, and that could lead to earnings downgrades and negative surprises. Jubilant United Spirits, again, obviously valuations are just prohibitively expensive in our view. And secondly, we don't think the recovery is going to be that quick. It's going to be very gradual. Okay. And the 2Q numbers kind of supports our thesis.
Yesterday we were speaking with Anish Damania of IDFC, and he was telling us that the interest towards the mid-cap sector has picked up so much in the last weeks and months. And you have been one of the best placed to pick wealth creators within the mid-cap space. Any fresh ideas that you've been looking at that one can still invest into despite the run-up?
We are now struggling to look for ideas now for the last couple of months because top-down, most of the stocks we've been covering for a while have become just too rich for our comfort, and we have been on a downgrading spree, in fact. Okay. The names where we still have a conviction on is MCX, then LIC Housing, Exide, where we still think the risk reward is still attractive in terms of positive surprise and current valuations.
I have a bright new idea that no one has heard of, Gautam. Logistics. Have you heard of those companies? You don't like any of them?
No, we know of them, we met them, but sadly we don't cover them right now. Okay. So can't really comment on them. But yeah, as a sector, it seems well placed.
All right, Gautam, we will leave you to your conference and of course touch base with you and your colleagues later on in the afternoon for more ideas that you would have picked up from the numerous companies and investors who will be at your conference. Have a great conference out there.